Good afternoon, guys. My name is Paul, and I work for Exponential Investment Club, which primarily just uses other people's money to make more money. and I work as the currency trader. So what we primarily do is invest and trade in currencies in order to make a return on the investor's investments. Now, this is not really what I'm going to be talking about. What I'm actually going to be covering today in this video is why so many, in fact, why such a huge number of individual retail traders are indeed losing money. What is the reason for that? Now, this is not going to be some BS course, okay? I'm not selling you a product or anything like that. Therefore, I can be real with you guys. I can tell you all the cold hard facts and the real way of becoming successful and consistent in your trades. Now, the reason why this is not covered in many books, why it's not covered in a lot of forums, maybe why it's not a special chapter in certain trading books. The reason is because they're selling a product, and in order to sell a product, they try to give you the main advantages and maybe even spin the truth on how easy trading is, when in fact it's the exact opposite of that. So we're going to be covering all these topics, and instead of just giving you a fairy tale view, maybe a naive view of how the market indeed works. Okay, so the average trader may become confused, may be overwhelmed with the amount of information that is out there at the moment in terms of trading systems, psychological settings, not settings because you're not a robot, psychological presuppositions, and various other elements. And when someone turns on the internet, when someone goes on YouTube, when someone types in Forex trading in Google, you just get tons of people trying to sell you trading products, trying to sell you, systems on the internet, maybe giving you free systems, but not telling you how to use them, not telling you how to use risk properly. These various elements that do affect your trading are not covered. Well, they are covered, but it's difficult to find them, and everyone has their own different perspective, and you can become overwhelmed with the amount of information that is out there. And in reality, 9 out of 10 traders in the long term lose money. That is astounding. That's just an incredible statistic. That means only 10% of people are actually consistently profitable in the long term. And why is that? And there are many reasons to do this. You can go on forums and people's views just vary, but mainly just they go down to these 3 factors. It's maybe because of high frequency trading. The big wigs within Wall Street, within London, these hedge fund managers using high frequency trading systems. They use computers and hold trades for maybe 1 or 2 milliseconds to make a return. They're just using these black box systems that somehow are making millions, but are indeed changing the behavior of the way the market actually moves. Or is it the hotshot hedge fund managers that are using insider trading to literally eat the profits of the individual investors and traders in the stock market, and they're not being caught. Some of them been caught. Some of them have been doing it for over in decades, and that is the main reason why the markets are changing and people are no longer profitable. Or is it the fact that we are indeed in a recession since 2007 to 2008? We're still in this huge economic recession that somehow is making it rather impossible to make a return or making a profit. And I do agree with you guys that trading has changed. People no longer have to call their stockbrokers. They don't usually get a stock certificate or bond certificate. Everything's pretty much instant. You can just have an iPad, a laptop, a tablet PC, and wherever there's an internet connection, you literally can just make trades, make money, or lose money in most cases. So and the thing is, uh, look, let's actually look if the markets have changed. Somehow the behavior of the markets indeed has changed the way it moves. So here we have the German mark, the Deutschmark, against the US dollar. It started all the way from the 70s to 2005. Okay, so you can see this chart and the way it's been moving, okay? So we see an uptrend in the 1970s all the way to 1970, all the way to around 1980s actually. Here's another currency pair that is uptrending in the 2000s, 2008, 2012. So we actually see that markets still are uptrending. We have a range in the 90s, another range in another currency market in another decade, and another currency pair in another decade as well in an up range. Then we got some consolidation where price pretty much, as you could tell, is not really doing anything. It's just jumping around. And as you could tell, same thing in the 2000s, 2012, same thing. So if indeed the markets are still doing the exact same thing they've been doing decades ago, uptrending, downtrending, ranging, and consolidating most of the time, if history does repeat itself or rhyme, in a sense, why is there still so many people losing money? And you notice this all the time, so many traders lose money. They become upset. Then they just blame their strategy or their stockbrokers or the forum which they got their strategy from. And, I used to do this as well. They keep buying new trading strategies. They keep going on Google or the internet or YouTube to just find new trading strategies, and or they just buy new books. The secrets of Forex millionaires, miracle Forex secrets, using these rather buzzwords that go deep inside your core of your psychological value in order to sort of think, yeah, this is what I want. I want to become a millionaire. I want to be a successful Forex trader. And, these buzzwords are the reason why people buy these books, including myself. And this sort of gets you into a loser's loop. So you buy a trading strategy, wherever, whether it's a book, whether it's online, etc. You lose money in the long term, maybe in your first month. You become upset. So then afterwards, you buy another strategy, you lose more money, you become upset, you carry on, and the cycle is never ending unless you change your perspective. I'll go into that. So the main aspect of why so many people are in the loser's loop, and I know you guys are going to hate me for saying this, it is psychological. It is all in your head. The way you're programmed, the way you view the market, the way your whole core behavioral pattern is what is detrimental to your trading account. And I'm going to go over this in detail. I know guys, this does sound a little bit ambiguous, okay? But I'm going to be making more videos to go into more detail as to why psychology is such a key element in order to become a successful trader. The successful trader has these personality traits, okay? They are cool, calm, and collected. Other words, Zen. Being cool, that means you're not excited. You're not going to be throwing huge parties once you make a big profit. You're not going to be, down in the dumps, depressed off your bum, just being extremely depressed when you lose money. Just being calm, neutral in your personality when it comes to your trading decisions and the execution of your trades. Being patient, this is such a huge factor. A lot of people that do come into the Forex have this sort of get-rich-quick scheme mentality. And I hate to say it, I had it as well, okay? This is not a get-rich-quick scheme, guys. This takes a lot of time in order to become consistently profitable. Patience is such a huge factor because you can have 1, 2, 3 losing trades, 1, 2, 3 losing weeks, 1, 2, 3 losing months in some cases, okay, of losing trades. So being consistent and sticking to your strategy is core in becoming a successful trader, okay? Confidence is key as well. Confidence. What I mean by confidence is not risking everything, not believing in the trades. I mean, it's confidence in pulling the trigger. Being not hesitant in pulling the trigger. When you do have a trading opportunity, and let's say you had 3 losing trades, that will affect the way you're going to be trading if you are emotionally attached to your trades. These losing trades may actually make you hesitant, actually putting on this trade. So confidence in your system is key to consistent success. As I said, guys, I will go over all this stuff in later videos, okay? So these traders, they're not been touched by God. They don't have some holy grail strategy. What their strategy is doesn't even probably, it's not amazing in any ways. Anyone can learn them. Most people could actually learn them. It's just the way they approach the market, and it's their perspective in the market that actually gives them their edge and their consistent profits. Now, I'm going to go a bit metaphorical, but please excuse me. Let's say your perspective on, let's say, believing in God may can completely change your behavioral patterns and the way you view the world. So if, let's say, you don't believe in God, you will view the world in a certain way. And if you do believe in God, you will view the world the way the way it's made, or the way it was created, or the way it was made, is completely different than to someone who doesn't believe in God. Their viewpoint is completely changed. And it's the same thing with trading systems, the trading psychology. Your trading psychology, your core perspective on the market, okay, is what's going to make or break you. If someone believes that somehow they're going to beat the market, that, they're just going to, once they finish their trading course, they're excited, they're willing to make money, they're going to just take the market by the balls and just literally just keep bashing out returns, making 600% returns a year or something stupid like that. But in reality, they're this little goldfish filled with sharks. Who are the sharks? The sharks are the hedge funds. They're the stockbrokers. They're your broker as well. Believe me, they are your broker as well. And they're the investment banks as well. And it's difficult, This perspective is scary to some people, but in elements and in core essence, it is very, very helpful in your trades, in order to understand why you may lose 1 or 2 trades, why you're not going to have 100% win-loss ratio. And, if you do think you're going to believe you're going to beat the market somehow, let me just put this to you in perspective. The amount of money that is traded in the currency market is around $4 trillion every day. That's 2.5 trillion pounds for those Brits out there. The US federal budget last year, 2011, a whole year's worth of spending by the federal government in the US was $3.45 trillion. That means a whole year's worth of federal spending does not even compare to a day's worth of money being exchanged in the currency market. So if you think you're going to somehow beat the market, or you're going to, make fantastic returns from day one, forget it. There's a lot of big boys out there. There's a lot of professional traders out there, and you will, if you have a big ego, you're going to get stomped out. Or if you're too hesitant, you're just going to stomp out as well. This is what you look like compared to the market. A kid with plastic sword and plastic armor going against the dragon. Now, the core beliefs, the main reason why, as I said, why most of us do fail in the currency market from the beginning is because the way we have been brought up and our core behavioral patterns that have been learnt by your parents, by your grandparents, by your guardians, whoever raised you. Could have been your brother. Your parents tend to say that working hard for money, the Protestant work ethic, you have to work hard for your money. If you don't work, then you feel guilty. And this is a huge underlying problem with over traders, people who trade too much, that somehow, because they're not doing anything in the market, they're not involved, they somehow feel that because they don't work hard at this job, then they feel guilty, they feel bad. Next is being right feels good, being wrong feels bad. Whenever you do chores or whenever you did something that pleased your parents, they gave you a reward. Whenever you did something bad or naughty according to your parents, they punished you. And again, this is a core elemental sort of thing where whenever you do something wrong, you feel bad. Whenever you lose a trade, you feel bad, you feel depressed. Whenever you make money, then you feel ecstatic. And lastly, this is more for the newer generation, but also the older generation, I guess like in their 40s as well, they also may have this problem. It's impatience. Kids these days are brought up on the internet. So 25-year-olds, they literally have been growing up with the internet, with, anything that you can imagine in terms of information or data can be found within nearly instantly. Music is instant. TV is instant. On-demand TV shows, TV channels is instant. Having instant movies, obviously it's illegal. However, that's not really stopping anyone. Nearly all the printed books that have been recorded, you can literally find on the internet within like half an hour. Instead of going to the library, instead of watching movies in the cinema, instead of going to the music store in order to buy your music. So everything is now, everything, we can get this now. And this sort of impatience is extremely detrimental to your currency account, because even now your executions are instant, your charts are instant. You don't have to draw them anymore as you would have had to 25 years ago. So everything is different, everything is instant, and that's extremely one of the primary detrimental factors to your currency account. And this is a good analogy and a good metaphor for a person. When you do start off trading, you sort of think, you just, let's say you are a boxer. You are quite big. Let's say you went to the gym a few times, you got big muscles, and your opponent, but you never actually took part in a fight. You never had a fight before in your life. Next, you got a guy who's a bit shorter than you, maybe look a bit smaller, looks a bit humble. However, he's been in over 1,500 fights, 1,500 fights. Who would you place your money on? The new guy never felt being knocked out. He never felt, a real sort of feeling of pain. He doesn't have pain tolerance, okay? He doesn't have the psychological backdrop, the psychological mentality, and the training that is involved in order to become a successful fighter. While the other guy has psychological training. He knows what to do before a fight. He knows what are the important training methods and the sort of prepping up before you fight. He has this sort of immunity towards, I wouldn't say immunity, he has tolerance, a big tolerance to pain, and he's perseverant. Perseverance is the thing that makes or breaks, a fighter. Being perseverant in your fights, being perseverant in trading is such a huge element, especially when you keep losing after a fight. When you do have a stronger opponent, does keep knocking you out, keeps not knocking you out, keeps putting you down on the floor, makes you drop out. Your perseverance is what keeps you going, and your pain tolerance as well is what keeps you going. So who would you place your money on? The boxer who may be a bit strong but never has had a fight in his life, or the person who's emotionally prepped, maybe a bit smaller than him, but however his psychological training is there. He's in the moment. I would put on my money on the guy who has the psychological training, obviously. And it's the same thing with traders. Exactly the same thing. Your core elemental beliefs, you may not realize this, whenever you're in the office or whatever, you just feel neutral. However, when you have road rage, you may be impatient, get angry when someone overcuts you, you may become impulsive in your driving. That's you'll only find out your core sort of emotional, your core elemental, your core psychological behavior whenever there's an emotional situation. Okay, and the thing is, trading, all of it is, if you let it, it will break you emotionally if you don't have the psychological training that is involved. Okay, so if you lose money, that may give you sort of anger, impulsive sort of views, impatience. I was extremely impulsive before I started trading. Impulsivity literally just drove me, because I was part of the internet generation, and that's what sort of gave me that personality. So I had to unlearn it. It's difficult, and the thing is, this training and this psychological view and again this perspective, the way you view the markets, your perspective on the markets can be changed. You can change. If you're young, then you can change. 25, 35, 40. You are able to change the way you view the market. However, if you're a bit older, you're more set in your ways, it is a bit more difficult to change your core viewpoints and perspective on the market. Okay, so as I said, psychology is the key to success, and if you don't have the key, you can't open the door to consistent profits. So I know, guys, I have been a bit ambiguous. I have sort of waffled a little bit. I'm going to go into more detail on the different aspects of the psychological training, and to change your perspective on the markets in order for you to become a successful trader. So if you do like my videos, please subscribe to my channel. Send me a message if you want, and I'll hopefully answer any questions which you have. Maybe I'll make a video on it. Lastly, post me a comment, tell me what you think about the video. So happy trading, guys, and we'll get you on board to become a successful trader. Take care.